Ladies and gentlemen, we have some positive news to report to you that I think the markets are going to like quite a lot coming tomorrow morning. And it wouldn't surprise me if, well, stocks move higher tomorrow. But then again, keep in mind we are subject to evolving headlines, and what's moving this market these days is not the data, it's the news flow. And whatever the news headline is on any given day, the markets want to pay attention to, that's what we react to. So this is subject to change, but minus any extreme change, I think you're really going to like this news. So first and foremost, Trump exempts phones, computers, and chips from new tariffs, specifically China tariffs. That is obviously going to help a company like Apple. It's hard to see how Apple would not do well on that news tomorrow. And due to the market waiting, Apple would likely, bring the indexes up quite a bit. I imagine it could be a 10+% day, 15, 20% day for Apple. Hard to say when the stock is down so much so fast. But it says here, the guidance also includes exclusions for other electric devices and components, including semiconductors, solar cells, flat panel TV displays, flash drives, memory cards, and solid state drives used for storing data. So a lot of tech related products are no longer going to be tariffed coming out of China. And China said that US tariff exemption is a small step to correct wrongdoings. So this seems like more of a friendly tone that China is taking towards at least this exemption versus a continually escalating trade war. Tariffs being met with higher tariffs, and it's kind of been snowballing in the wrong direction recently. Also in the news today, Lutnick says US has had soft entries through intermediaries with China on tariffs. Lutnick says that semiconductor and electronic tariffs will come in a month or so. So we'll see how much the markets care what Lutnick has to say. It seems like Lutnick says something and then it's kind of undermined shortly thereafter sometimes. He was the one up until Trump delayed the tariffs for 90 days saying there will be no negotiations, they're going into effect. You kind of start to lose credibility after you speak that strongly about a particular path and then it's quickly reversed. Bill Ackman said, a pause is not a sign of weakness. It is a tactic to create leverage in a negotiation. Trump will provide more details on semiconductor tariffs coming in the next month or so on Monday, so tomorrow. The US and Iran agreed to meet again next Sunday, according to the White House. Oh, and by the way, the exemption of the electronic components, hard drives, solar panels, essentially iPhones, will be retroactive to April 5th. So any tariffs that have been collected will be returned up until April 5th. And this upcoming week really starts to kick off some of your larger companies that will be reporting. Tomorrow morning, you have Goldman Sachs and M&T Bank. Monday and after hours, you have Applied Blockchain. Tuesday in pre-market, Bank of America, Citi, Johnson & Johnson, PNC, Albertsons, Ericsson. Tuesday and after hours, you have United Interactive Brokers, JB Hunt. Wednesday pre-market, you have ASML, US Bancorp, Abbott, Progressive. Wednesday and after hours, Alcoa, Bank of Ozark, CSX, Kinder Morgan. Thursday is your big day. You have TSMC in the morning, United Health Group, Huntington, American Express, and Ally Bank. And then Thursday and after hours, you have Netflix and Independent Bank. Now, TSMC is actually critically important this time around because if NVIDIA is going to miss, you're probably going to get a bad number from TSMC, right? Since they manufacture all of NVIDIA chips. Well, with all of this volatility, all of this, recession fear out there, how is AI investments going? Okay. NVIDIA, even after it's fallen, is still a expensive stock relative to, where it was 3 years ago. 4 years ago, 2021, right? It's still expensive in that regard. You're still expecting good numbers from NVIDIA, right? You're still expecting companies are spending money on AI. If they are, that's great. If they're not, that's a problem. And I mean, you could kind of interpret how Wall Street could go down the rabbit hole and say, hey, are, AI investments, going to be dramatically reduced because of this tariff uncertainty, this economic uncertainty? Is that where companies are pulling back on their investing? Obviously, I don't have the answer for you, but with AI, certain areas at least, like NVIDIA, so important to our markets and other big tech names, AI is a big thesis for a lot of those companies. If that gets degraded this week, that's a problem. Now, I'm under the assumption that nothing has really changed. You could make an argument that with higher tariffs, there's a greater need to actually reduce the cost and increase the efficiency of your already existing operations as is, which could make a larger case to improve AI, to invest more into AI. If, AI can increase productivity, if you can use AI instead of having extra employees, unfortunately for those extra employees, it makes sense to use AI instead. Because if you are a company that is now getting tariffed, you're going to try to make that cost up internally. You're not going to be able to raise prices and pass on all of that cost, no matter what company you are. People will buy less of your product. You will see what is called demand destruction. Okay. I don't think, again, that's happening in the AI space, in the semiconductor space, but if it is, that is a big problem. Now, I think you're kind of priced for some weakness here, but you're not priced for any kind of bad numbers, right? You're still priced for good numbers. And as we get closer to NVIDIA earnings, we'll have more estimates coming out. But I can imagine the estimates haven't changed all too much from the guidance that NVIDIA set. But we'll see. Now, Netflix is really not in the crosshairs of tariffs, from my understanding. Maybe they are in some capacity. But Netflix, it tends to move your big tech names. And whether or not that happens again, we'll see. Netflix may just move by itself and not move the rest of big tech again, because it's not as impacted from those tariffs as those other companies are. Now, another big situation we're going to be faced with this earnings season, which again, I don't know really how this is going to play out, is we're not going to get guidance from probably anyone. Okay. And the companies that do give guidance are putting themselves out there and taking a risk. I don't think companies are going to give guidance at all. So if you think about what moves a stock on earnings, it's guidance, right? Nobody cares what happened in the quarter that's being reported, if the next quarter is going to be really good, or if you have a good, quarter that you're reporting, but the next quarter is going to be bad. That's what moves a stock. If you just get no guidance, and all companies do that, that may actually be a positive from maybe an algorithmic standpoint, because there's nothing to react negatively to, instead of companies coming out and giving negative guidance, which you may get some of that. But I think companies overall, there's really not a way to give guidance. There's no clarity whatsoever. So that'll be interesting to see how that affects these names this week. And then obviously, as you guys know, this is just the start of earnings season. We're going to have earnings that really go for the next month and a half. So, it's going to be largely company by company specific. Big tech obviously is going to be important. Now, as Tom Lee said in the prior video, as I've talked about before here on this channel, big tech is pretty washed out here, right? Apple did recover quite a bit, but it was in the 170s. Microsoft, 380s, Google, 150s, NVIDIA, 110. I mean, you're still kind of washed out on these big tech names. Tesla, 250s. I mean, there could be room for recovery there if, or hopefully, if these companies are not too impacted by the tariffs. If those earnings can hold up, then, I mean, you can make a case that there could be room to move higher in those stocks, as Tom Lee did on Friday. Now, let me also give you a brief rundown of what to expect this upcoming week. There's actually quite a bit of important data coming out, including a speech from Fed Jerome Powell and retail sales. But starting off tomorrow morning, you have consumer inflation expectations. This tends to be more reasonable, less political. So we'll see what happens here. You're expecting this to go from 3.1% to 3.3%. So you are expecting it to move higher, but not like the almost 7% 1 year forward inflation expectations that the UMich survey has right now. Fed Barkin, Fed Waller, Fed Harker, and Fed Bostic will all be speaking tomorrow at various different times in the afternoon. Now on Tuesday, you will get export prices, import prices, and the New York Empire State Manufacturing Index that will come out at about 8:30 in the morning on Tuesday. Fed Barkin speaks around 11:30 in the morning. Fed Cook speaks at 7:10 p.m. on Tuesday. And then you get some GDP data, retail sales data, different data points out of China as well on Tuesday. On Wednesday is your biggest day, because you get retail sales month over month. You're expecting a really good number. If that number's weak, then again, you're going to have more recession concerns, okay? Now, whether or not this number is strong or weak is also potentially going to make the difference in if GDP for Q1 is negative or positive. Because as of now, the Atlanta Fed GDP Now tracker is tracking negative 2.4%, but with the alternative model forecast, which adjusts for imports and exports of gold, you're only negative 0.3%. Now, this data coming out with retail sales is for March. So you're expecting positive 1.3% month over month from February's number of positive 0.2%. That would be a very strong number. If we get something like that, I would expect that GDP goes positive for Q1. Now, maybe not. Maybe there's some things that offset that, but retail sales, very important. Consumer spending money overall, very important for the GDP report. So that's why I think Wednesday is going to be a big day. Not to mention, you have a speech from Fed Jerome Powell. Now, part of the reason why markets went up on Friday as well was Fed Collins that basically said, if we get too much weakness in the bond market, the Fed will have to step in. And that was kind of seen as the Powell put, the Fed put, that they will make sure that the bond market does not break. And the bond market has been breaking recently, and it does create some risk to the broader economy. And the Fed's kind of starting to step in here with a little bit of a voice and saying, hey, we won't let things just collapse around us, essentially. Now, on Thursday, you get building permits and housing starts for March, initial jobless claims, Philadelphia Fed Manufacturing Index, Philly Fed business conditions, CapEx, employment, new orders, and prices paid. Wall Street does react to this a little bit, but it is only regional, so keep that in mind. On Friday, you don't have anything. Friday's going to be your slow day, and all you have is a speech from Fed Daily at 11 o'clock in the morning. So this week's actually going to be kind of important. And as we've talked about on the channel before, you still have pretty oversold conditions, not nearly as bad as we had, prior. Like the percent of stocks trading above their 50-day moving average hit as low as 5%, which is crazy. This is for the S&P, that is. You're now at 14%. Which is still very low. The lowest levels we got to in 2022 were around 10%. So you're still very, very low. But we were just crazy washed out at one point about a week ago. Okay. So from that perspective, I think there is room to move higher this week, especially if things go more positive than expected. And we do kind of have a negative bias out there in markets. I think the downside is a little bit more expected than the upsides. Positive surprises on earnings or positive tariff developments. Anything positive is kind of being heavily discounted in markets right now. If we do get some positive things happening, then that could definitely start to kickstart markets to move higher, at least a bit in the short term. Now, the CNN Fear and Greed Index was as low as 3. I've never seen that thing at 3. That's crazy. You closed out this week at 13, which is still very much on the low side. So again, still room to get a little bit better there. AI Investor Sentiment Survey, 58.9% of investors are bearish. Neutral investors have gotten completely squeezed out. 12.5% of investors reporting they are neutral, and 28.5% reporting they're bullish. So bulls have actually moved up. Bearish investors still remain almost unchanged over the past month, and neutral investors are down like 50%. So right now, you kind of know you're either bullish or you're bearish. And with bearish numbers that are double what the bullish numbers are, again, there's room for a positive, surprise that makes people get more bullish. And we see what kind of explosive volatility we can get to the upside when good news does come out. And I think Trump really wants to undo some of the pain we've seen in TLT, right? I think his whole objective was to lower rates as these tariffs were threatened and go into effect. It's had the complete opposite. I mean, whether it's Japan or China or Canada for that matter, somebody is out there wreaking havoc in our bond market. We don't know who, but yeah, someone is targeting our bond market, and Trump wants to stop that. So I don't even think it's about the stock market. I think it's about the bond market. And I don't know if that'll stop it, if Trump kind of backfires. You might need Jerome Powell to step in, and we'll see what Powell says on Wednesday when he does give that speech. So with that said, ladies and gentlemen, let me know your thoughts on this upcoming week down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.